Our first stock is Amgen. Hello, incredible.
That's right.
Amgen. Everyone asks about Amgen. We've got a lot of requests for this from the patrons, from the viewers, and so here we go. The ticker symbol is AMGN. Paul, what do you know about this company? Why is this so wonderful?
So I really enjoy reading the 10Ks of pharma companies because I like seeing their breakdown of revenue on their current drugs, what drugs are expiring, what drugs are on the horizon, how much is in the phase 1. They're one of the most beneficial 10Ks out of all the 10Ks you're going to read. You know, it's funny. Seth gave me a couple of companies yesterday to look at the 10Ks, and the second one I was like, oh my God, this is exhausting.
Well, you did. We talked last night. You messaged me. We were both sitting in bed with our dogs.
Actually, I was in on the couch.
But you said, boy, I really enjoyed reading Amgen's 10K. So we will get to that right now. A deep dive in Amgen, looking at the 8-pillar analysis, not just for 8, baby. And Paul is going to open up the 10K after we talk to Trader Mo. But let's get after it, Paul. Amgen is a multinational biopharmaceutical company headquartered in Thousand Oaks, California.
Okay, $130 billion company. PE of 17.9, so that's a check. And by the way, guys, I've been kind of leaking this out to Patreons. I am going to be changing 2 of the pillars because even I've stopped looking at PE because I'm focused so much on cash flow and profit margin. So that'll be coming at some point in the next few months. I'm trying to find the 2 exact ones I want to replace it with, but this is exciting because we focus so much on free cash flow. I'm going to start ignoring PE completely. But profit margin of 28.57, also a check mark. So we got 2 good solid checks to start. Now, the great thing about the Everything Money app, 2.86% dividend, which paid out 3.7 last year, and their free cash flow was 10. So they're only paying out 37% of last year's free cash flow in their dividend. That's a pretty solid number. So remember, guys, dividends aren't always secure. A lot of companies will try to sucker you in by taking on debt to pay out a big dividend that they cannot afford. So don't fall for that trap. It's called a dividend trap. Don't fall for it.
Revenue growth for Amgen. Get after it.
21.9 to 24.24. Check mark there.
Great. Profit growth, baby.
So this is an X, but not by much. 7.72 to 7.26. Now, guys, remember, the great thing about the Everything Money app website, it's going to clump yearly. If you remember Y charts, if the last data was from the end of 2019 for the year, that's the last year they're going to show. We show the last 4 quarters at a time to compare people. So compare years. So this is way better. But right now we have an X on net income. No. Shares outstanding is the next one, right, Seth?
Yep, shares outstanding is pillar number 5.
Now, these shares outstanding aren't the right number. It's our own calculation problem, but the idea is correct. 3 billion down to 2.34, so check mark there. And they're buying back aggressively on a reasonably priced company, it seems. So I like that.
Pillar number 6 is current assets over current liabilities, baby.
22.66 versus 9.95. Check mark there, plenty of cash. $12.6 billion extra.
Shall we look at the free cash flow, baby?
I don't think there's anything in the world that would make me happier.
Really, at this moment?
Yeah, that's not true.
Okay, go on.
The stock market falling 80% would be pretty nice. So remember, guys, cash from operations, less capital expenditures. And remember, we added this free cash flow line for our website to make it easier that we don't have to do that. This is not actually on an investing section of the cash flow statement. We do it for you. It's to make it easier. We had 10.25 to 10.06, so it's an X.
Uh-oh.
But it's very consistent with the earnings, because you remember the earnings fell slightly too. What are you laughing about?
It's supposed to be an 8-pillar stock.
What was that?
This is supposed to be an 8-pillar stock.
Well, why'd you pick it then?
It was on our list. Boom, 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 boom.
Oh, well, price might have changed.
I see.
Oh, you know what it is? I'm sorry. Here's the explanation why.
Sorry about that.
When I pull the list, no, it's not your fault. This is a great point. When I pull the list from Y charts, they go off of the previous 4 years' data. They don't have it all. It could be completely different than what it is today. So I send that list based on Y charts. Once our Everything Money app is done, I will be sending the list based on Everything Money. So that is an issue with it, but this is fine. We're going to get better at this, and I'm okay with it.
I love you. Okay, let's get after this. Okay, we are now on to free cash flow growth.
Yes, so then it is an X. And Seth, you want to add this up? So
can you give me all the
10,
numbers?
20, 30, 40, 48, and 50 billion. It's $10 billion a year is the average.
Okay, so the average free cash flow is $10 billion a year.
Times 20 is our number, 200 billion. That's a check, right? Because the company's $130 billion.
Yes. Oh, wow. Look at that. So this is the meat of it, folks, is we take our free cash flow, we find our multiple. This is pillar number 8. We find our multiple, and this is where we get a lot of questions. Is like, where did we come up with this 20? And that if we multiply the 10 billion times 20, obviously we get 200 billion is for our desired market cap, and it's at 130. I mean, the world thinks it's worth $130 billion.
The world has determined its worth. So currently it's selling for 13 times free cash flow. Now, so far, I look at it going, yep, I like this. This is something I want to look further into, and that's why we did a deeper dive into the 10K. I didn't read the 10K word for word, but what matters to me on these companies, these pharma companies, is what are they doing? What is their pipeline? What are they doing? So Seth, why don't you talk while I pull up some data?
Mo, do you want to head over to Amgen Trading? You ready for this,
sure.
baby cakes? Here we go.
What I'm looking at, this is about 12 months, and look at how consistent this company is. They just stay within this price range, and they don't really deviate. Paul, do they pay a dividend?
Oh yeah, it's a
Is it
pretty
a good
decent
one?
dividend too.
Man, I don't know. This seems like a good value play. But the other problem is when we have these companies that don't fluctuate very much, they're very difficult to trade. So if you want to right now, because we're on the bottom and we're oversold, you can throw a tracker share on there and just wait until we get a green candlestick that pops up on us and we can buy it. I am not foreseeing this going much higher than 245 a share or something. So this is going to be a tight trade for you. This is not the best stock to be trading, in my opinion. This is kind of like one of those AT&T, something like that. Doesn't really move and just kind of coasts along. Probably better a value play. Yeah.
Paul, what did you find when you're digging into the 10K for Amgen?
So a big concern with a lot of drug companies is what percentage of their revenue comes from one or two drugs. This is what I like about Amgen. You look at this, their biggest drug, Enbrel. I don't even know what that does. 22% of their sales in 2018, 23% in 19, 21% in 20. They did say this drug is losing revenue share, is losing revenue right now in the market. I didn't read exactly why, but look at all these other drugs they have. 1, 2, 3, 4, 5, 6, and then this is 25% from other products. Guys, they're getting their revenue from 7 main products and then 25% from a bunch of other products. It's not like, one of the things I don't like about Biogen is so much of their revenue comes from one product. These are the things that I like to see. And look, their other group is growing. It was 25% in 2018. 2020, it was 27%. This is awesome. I really love this, guys. I think to myself, this is a diverse group of drugs. Now, did I go into detail to talk to doctors about which drugs they love? I did not. But I look at this and saying with this litany of drugs and other products, they have a stable cash flow stream that next year, I'm not going to see this drop 40%. I just have a hard time. Like, this is a very, very stable. Now, then you just sit there and say, okay, Seth, why don't you talk for a second while I pull up something else?
Well, I was going to switch topics. We got a lot of great ideas, but in general, while we pause, make sure that you are tickling that thumbs up. We love the positive, and I would dare you, I would double dog dare you to share this video with a friend. There's a share button there. You can text this to somebody who needs to hear this. If they're telling you to buy Tesla and spend all your money on that and NIO, maybe share this with them and they can argue with Paul in the comments. Keep going, Paul.
So this is from their 10K directly. This is actually, I think, better than the Biogen pipeline. This is their phase 1, 2, and 3 programs. Look how much they have here, guys. They've made 4 acquisitions in the last year. They're doing biosimilars. These guys are very, very active. I actually feel...
Can you make it a little bigger, Paul?
Well, the only problem making it bigger is it's going to...
I see.
Yeah,
Okay,
so
I see.
I'm just showing this to you guys to show, like, hey, phase 3 is like 55% approval rating. They have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Right here, they're going to get 5 or 6 approvals right from there. Their phase 1s are about 15%. I mean, look at all that. Guys, they got a lot going. I think there's I think there's a growth potential in this company where I think maybe, I mean, Mo, what do you think? Like, do we sell some puts on this thing?
That's what I'm thinking right now.
So
People are saying Amgen or Biogen. I mean, why not both? I mean, it's not like
yeah, it's not like you have to pick one or the other.
Yeah.
I do think there's a concern with Biogen's revenue stream in the next year or two, but Biogen has a very, very good pipeline as well.
Yeah.
So that's why Biogen though is selling for 9 times, free cash. I mean, a much lower free cash flow rating.
Yeah.
So it's a pick and choose which one you want to deal with.
Right. These are 2 big powerhouses in this sector.
I love it. I'm going to go sell some puts on it. In fact, I want to pull up Street Smart Edge and look at some put prices. If that's okay.
Please do.
Okay. So Seth, Mo, keep talking.
Mo, what do you think? Amgen or Biogen? You said both. Why do you love both?
Yeah, I mean, there's no point. I mean, if I find 2 or 3 pharmaceutical companies that I like, it's not like I'm just going to go pick one stock from each sector. If I find 2 great companies and they're not competing with each other, I doubt that. I mean, they're probably competing in some regard, but they're probably not competing on every single drug that they make. A big thing that's going to be really heavy in the news for Biogen coming up here on June 7th, which is their PDUFA date, which is when the FDA comes out and gives them validation of their drug aducanumab, which is for Alzheimer's. It's going to be, that's going to swing the stock big time. It's had some big swings in the past year or so. The big thing about Biogen is this drug aducanumab that is coming out for Alzheimer's, which nothing like it exists on the market. Look at these big gaps that it makes when news comes out. I mean, there's a gap here, big drop here. This was a massive drop back in November of last year. I mean, so just be prepared if you are in Biogen, this decision on the June 7th is going to move the stock. I would be very surprised if it did not move the stock one way or the other, depending on the FDA's decision.
Go ahead, Paul. What were you saying?
So anybody who's new here doesn't know this, but I love selling puts to buy companies I love. What that means is I sell somebody the right to force me to buy a stock at a price that's lower in a date in the future. So as an example, Amgen is currently selling at $231 a share, okay? If I want to buy Amgen at $215 on April 16th, that is 39 days from now, somebody would be willing to pay me basically $2.30 for every share. And it has about a 20% chance of me getting that share. So I'm being paid $2.30 to wait for the stock to fall to $215. If it falls below $215, I have to buy it at $215. So let's say it goes to $205. I'm still paying $215 for it. If on that strike date, April 16th, it's above $215, I keep the $230. I keep the $230 either way, and I just roll it on. And the reason I like doing this, guys, is it allows me to find companies that I like at prices that I like and be paid essentially to wait for the future. This is a very common conversation we have in our Patreon group. It's going to be a big focus of our entire channel because we sell puts and we sell covered calls on stocks that we already own. So it's a great way to go earn money while we wait for stocks to be at prices we want them to be at. That's what I love about it.
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. The top tier patrons get direct access to Paul and Trader Mo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. In comparison to other financial platforms, our software is by far the best value. This is your chance to get serious about investing. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.